Hello and welcome to Kalkine TV. James Preston with you live from Sydney for a very special edition of The Buzzing Trends. In today's show, we'll focus squarely on this week's big success story, Afterpay. We'll take a look at Afterpay's journey, the headwinds it faced during the coronavirus pandemic, and the synergies it built into its services, which ultimately led to its acquisition by another digital payments company, Square, for 39 billion Aussie dollars. So let's get started. The Australian fintech sector has taken centre stage as Square unveiled its plan to acquire Afterpay for $29 billion US. Square is an American financial services and digital payments company which was founded by Twitter founder Jack Dorsey in 2009. Following the announcement, however, Afterpay's share price rose by 18.77% to close at $114 Australian dollars and 80 cents per share. This led to an increase of 1.3% in the ASX 200 index. The euphoria resulting from this announcement spread to other buy now pay later stocks such as Zip, which saw its price increase by 9% on Monday. The upward momentum continued to stay in Afterpay's favour on Tuesday as well, with its stock prices closing at $127.85. So let's now understand exactly why Square decided to acquire Afterpay. Well, Square was keen to integrate Afterpay with another mobile payment service called Cash App, which is also owned by Square. Through this integration, Square plans to tap the younger demographic and ultimately lead them to its payment platform, as young consumers are known to have a preference for digital payment options. Square is expected to close the merger and acquisition deal in early 2022. It's common knowledge that the Australian share market has been under immense pressure after the coronavirus pandemic first began in March 2020 and has subsequently weighed down the nation's economy, shaking consumers and investors' confidence alike. Ever since Australia recorded its first coronavirus case on the 25th of January 2020, the S&P ASX 200 index has plunged drastically by over 30% up till the 19th of March 2020. Despite this, the positive developments in Afterpay's market demand led its stock price to soar by 1,225% from its 2020 bottom mark of $8.90, closing at $118.31 in December 2020. The whopping growth in Afterpay's share price has resulted from the growing usage of Afterpay's payment services both within and outside of Australia. Though the impact of COVID-19 on Afterpay's stock is quite evident, the balance sheet, business model and customer case that creates a level of protection during periods of economic uncertainty inspired confidence. This made Afterpay stand out among other buy now pay later stocks. With this deal, Afterpay customers will get the privileges of Cash App's stock and Bitcoin purchases and their financial tools, including money transfer and also cash boost, plus a whole heap more. We'll continue our breakdown of this historic deal in just a moment, but first a very short break on Kalkine TV.
Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown on the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine.
Welcome back to Kalkine TV, live from our studios in Sydney. James Preston with you for the Buzzing Trend Show, and today we are focusing squarely on Afterpay's journey, the headwinds it faced during the coronavirus pandemic, and the synergies it built into its services, which ultimately led to its acquisition by another digital payments company called Square. Let's now look at the headwinds it's faced in recent times. While 2020 was a year full of challenges for the Australian digital payment provider, Afterpay still managed to post a blockbuster performance on the stock market. COVID and related restrictions actually improved Afterpay's position as consumers shifted towards online shopping and subsequently made use of digital payments, including buy now, pay later outlets such as Afterpay. Co-founded in 2014 by Anthony Eisen and also Nick Molnar, Afterpay operates a buy now, pay later app that permits users to refund their smaller purchases in regular instalments. The app, however, does not charge any interest payments or joining fees from its users. At Afterpay, the average outstanding balances and transaction values were low, with no material concentration from a customer or merchant in its portfolio. During the coronavirus-induced gloom, Afterpay's CEO came forward to reassure shareholders that the company has risk mitigation capability and a dynamic system, and also had proactively implemented measures to deal with any potential issues that could arise surrounding COVID. Afterpay is a uniquely strong company. Its operating model and product design has built-in risk mitigation, allowing it to manage losses in real time, partially due to the short duration of its receivables book. The average age of Afterpay's customers is also just 33 years of age, and that's globally, which is seen as a key demographic for a number of consumer databases. The liquidity position and strong balance sheet of Afterpay provide it with the capacity, to considerably expand its business activities in the medium term and continue to fund its operating expenditure. Just to give you some details on its financials, the US region remained at the forefront for the company as it recorded a sale of around $1 billion in November 2020 alone. The growth was boosted by Black Friday and also Cyber Monday sales. For the first time, monthly sales figures in the US surpassed the Australia-New Zealand region, highlighting significant potential from the company's fastest growing region in terms of sales. On the other hand, referral to global retailers has generated more than $35 million in leads during November 2020, which is around 1.5 times higher over the previous corresponding period. Furthermore, continued integration of Afterpay across thousands of the US retail touchpoints, along with the new merchants, has ramped up the take-up of in-store retailers in the region. Over the years, Afterpay has acquired over 16 million customers and has a presence in New Zealand, the US, UK, France, Canada, Italy, and of course right here in Australia. Its growth has been exponential and the payday has been well earned. And there are, of course, plenty of other buy now, pay later providers, but we had to dive into Afterpay here at Kalkine, given the simply historic nature of the deal for this Aussie company. Now, there is another buzzing trend show coming your way shortly, but for now, I'm James Preston signing off for Kalkine TV.